On today's Hashi, I'm discussing the home values rising in half the U.S. and falling in the other half. Homebuilder sentiment in August and housing starts for July. Today is Tuesday, August 19, 2025. I am Byron Lazine, and the hot sheet starts now. Live from Naples, Florida. Welcome into the hot sheet. If you were on the BAMX members only role play, let me know in the live chat. We do that every Tuesday before the hot sheet. So every Tuesday, 9 a.m. Eastern, 6 a.m. on the West Coast, we're doing the hot sheet or the BAMX members only role play, mastery in the conversation. Today we talked about compensation requests to be lower. And it was a fascinating discussion. So if you're a member, you can obviously get the replay to that, school.com/BAMX. Michael, thank you for saying that was a great role play. Appreciate you and appreciate all of you for joining in here on the hot sheet. We got a whole bunch here today. We got home value report from Zillow. Zillow put out a press release yesterday, specifically on home values. Zillow has gotten a little more bearish on home values as the year has moved forward. Okay, so Zillow started the year a little higher than where they're at today, projecting forward where we're going to end up on the year. Zillow essentially has home prices going up about 1.7%. I think that's where Logan Motoshami, or I know that's where Logan Motoshami has the projection for the year. And it's probably because of the data that they're seeing like this. Okay, home values are rising in half the country, but in the other half of the country, they are falling. So how do you get to a stalemate, an even place, right? Half does one thing and the other half does the other. It's like a tug of war, okay? Buyers right now, according to Zillow, are gaining negotiation leverage, and there are high costs that are continuing to keep some buyers just frankly on the sidelines. So there's 27 metros that are in the buyer's favor or neutral. That's up from 24 last month. So a little 3 metro bump month over month. Listings are starting to linger, and the median for sale home has been listed for 60 days. And that this is actually an interesting data point. I think this is the most interesting data point right now. We know what's going on with prices. We're looking at it every day on the hot sheet. It's the only 24-hour look back on the housing market that exists on the internet for real estate professionals. So we get where prices are right now. This data from Zillow, which has so much of it, and now, double decade history of collecting this data, the median for sale home has been listed for 60 days, which is the longest of any July, not since COVID, but since Zillow's been recording the data. Okay, really interesting to think about. Wow. July, what was June according to Redfin? June, according to Redfin, was the month with the most cancellations. So a buyer and a seller come together or agree to a contract, under contracts, pendings, escrows, whatever realtor jargon you use in your market, right? Buyer, seller come together, they're agreed to buy the house, and that contract falls apart. Highest level ever recorded in June, according to Redfin. 1 month later, Zillow says, whoa, we're looking at the numbies. And in July, we're seeing the longest for sale tenure, 60 days, in any July we've ever seen. That's according to Zillow data. So if I'm talking to a seller, if I have a client who's looking at who to hire, we just talked about this and we had scripting around it inside of BAMX role play this morning. Okay. How about deal certainty as a component to what my process looks like when you're hiring me? We talked about that for probably 3 to 5 minutes. Deal certainty on what you should be presenting as your process to a customer. So deal certainty is one of the factors being impacted at a really high level. June, high cancellations. July, long tenure on the market. Sellers cut prices, according to Zillow, on 27.4% of listings. Again, a record high in Zillow data that stretches through 2018. So, hey, I know our buddy, friend of BAM, Alex Hermosi, just set a Guinness Book of World Records this weekend. Zillow now saying, hey, we're seeing some records being set on our data, which is, love them or hate them, their data's extensive. Okay, they have lots of it. There's no denying it. Okay, they have the traffic, and they certainly have a lot of data to sift through on these numbers. If we just look, I'll jump into BAMX here real quick, and I'll jump into the classroom BAMX members. I get a message just, hey, where do we find the hot sheet data every single day that you upload into BAMX? Just hit the classroom tab, go down to hot sheet, click on whatever day you want. This would obviously be today. And here's a visual from Zillow on where these home values are increasing still today. It's about half and half. Zillow is saying half the country's metros are increasing in value and half of the country are decreasing. Where does it sit? Okay, it's Northeast. Continues to be the same story. Northeast, Midwest, Sunbelt states where all the builders flock. Those are the places that prices are going down. Why? An abundance of inventory. Okay, more inventory than buyers. Some questions are just obvious in this business. One of the most obvious questions is when a buyer agent asks a listing agent, why do they want to sell? What are you, writing a poem? What do you think why they want to sell? They want the money more than they want the house. Do you have a legitimate offer? Are you asking any questions to construct an offer? Do you have real motivation? Or do you just want to write in your journal about why these sellers want to sell? Okay. They want to sell because they want the money. Okay. The obvious situation here is where is there no inventory? That's the Northeast. And what do you know? Prices are going up. You can use these charts, obviously, in your communications. They're all available for you in BAMX, just whether you're on the iPad, the phone, the app. We have a great app, School, and the app. Just hit that down arrow top right to download that data there. This one in particular from Zillow, half the homes are going up in price while the other half are moving down. Now, the price cuts, obviously, notwithstanding that it's happening. That's a future indicator that prices continue to move down throughout the year. But we know from NAR, hey, we're at a record high price. Okay, so what am I not saying here? Well, the national average hasn't moved down yet. What we're seeing is places like Florida and Texas, like really hot markets that probably, got a little bit overheated and builders got a little overzealous there. And they had huge demand. They had huge price increases. Those are the markets that are seeing the values fall the fastest. And that's where this national number is being dragged down. The acceleration of price appreciation. We're still at a record price, right? The acceleration of price appreciation, which is still going on a national average, quarter over quarter at a much smaller number, according to NAR. We covered that last week. It's being dragged down by these kind of markets: Tampa, Austin, Miami, Orlando, Dallas. Okay, it's Florida and it's Texas. Don't get it confused. It's Sunbelt states that are primarily seeing these drops. Okay, so if we look at some markets here on the Zillow index, Zillow Home Value Index, according to the U.S., is 367. This is going to include, I believe this would include, I believe it would include all homes, but it decline. I believe it includes all homes. U.S. 367,000. Share of listings with a price cut, again, 27.4%. The inventory changes before the pandemic, U.S. still down 19%. Sunbelt states are going to be like, what? Are you kidding me? Well, that number is being dragged the opposite direction by the Northeast states. So like the Sunbelt states are dragging down price. This inventory conversation is being impacted primarily by the Northeast. Okay. New York, look at New York. Inventory changes before the pandemic, 49% to the negative. Okay. Only 15% of listings there are experiencing price cuts. Okay. You got year-over-year price increase at 3.7%. LA still under inventory since the pandemic, 12%. Chicago, 53%. DC down 53% for Chicago, down 24% on inventory for Washington, DC. And now what's interesting is they're down 24% of inventory, but they're still reducing at a higher rate than the US, 28.8%. You obviously have some transitions happening in DC this year. So there's a hyper local dynamic that's happening there that would suggest why those price cuts are increasing. Philadelphia is down 43% on inventory. Boston's down 30%. Those are big numbers. Okay. If we go to the other side and where these prices are falling, well, Tampa and Denver are two examples. Tampa up 29% on inventory. What do you know? Price falling, down 6.2%. Denver up 23% on inventory. What do you know? Denver's falling on price 2.9%. It's a supply and demand game. It's an interest rate sensitive business, and it's a supply and demand business. It's very simple. Sellers sell because they want the money. Buyers buy because they want shelter. They want a home. Some of the building blocks in this business are easy to break down when you don't fall into the emotional trap that a client unknowingly is setting for you. Well, why are they selling? I don't think it's because there's a 300-year-old witch flying around the house with her spirits. Okay. I think it's because they want the money. So let's focus on how we get you the best deal, or you the most net money if you're on the other side of the equation. Talking about feelings, let's go and check in on the builders. Let's check in on the National Homebuilder Association, the National Association of Homebuilders, NAHB. They pulled out their builder confidence index, and they've got a new one here for us this month. We want to check in on our builder friends. They certainly are waiting for this interest rate to not only level out, but to move down in a meaningful way. And listen, the greater economies should be looking out for the builders, because if they start laying off, that is going to impact the economy across the board. So one of the reasons why I'm a proponent of getting these rates lower. Builders have to start laying off. It impacts a lot of industry. And every time they do that at a large scale, we see recession follow. I'm not rooting for that at all. Builder confidence report that just came out. Their confidence has plateaued. It's a low level, remains to be a low level. Okay, so you got the elevated mortgage rates. That's the top of a builder's concern. They're looking at their traffic every single day, and it's weak. They have an ongoing supply side challenge. Okay, and when we look at August, that's where their confidence set. It's a sentiment level remaining in a holding pattern for now. Okay, so the low level has been going on now for builders 4 months. Okay. This is where they're at. You can grab this slide, obviously, inside of BAMX, inside of school for BAMX members, that is. And they're down in the 30s. They're down in the low 30s for the overall index. How'd they feel about it in 2021? Well, that's the highest they've ever felt going back to 1985. But they're really below that, 50 mark. Anything over a 50 is good. It's Ice Cube, baby. It's a good day. And anything below 50 Not so good. Okay. Not good at all. And so what do you see here on the gray lines on this slide is recessions. Okay. So these numbers, you see confidence starting to go down. Confidence goes down for an extended period of time, as it did in the early 90s. Confidence plummeted for an extended period of time. Builders laid off. Recession ensued. Okay, when builders lay off, it's a signal that a recession across the country is coming. This isn't a real estate recession like we've had the last 3 years, these gray bars. This is a country-wide recession. And when the US has a recession, so does everybody else. So for my friends in Canada, when we have a recession, unfortunately, most of the times, everybody has a recession. The global economy is impacted, right? No better example than this one right here, looking back into the great financial crisis. Okay, so dot-com era. Before the dot-com bust, what was going on with builders? Well, their confidence was moving down for an extended period of time. You had the dot-com bust and you had the recession. Before, everything broke on, the great financial crisis, builders were like, whoa, our confidence is moving down. It moved down for an extended period of time. We had a long recovery during the GFC. Obviously, everybody's confidence plummeted when we found out in March of 2020 that the world was shutting down. There was obviously a V-shaped recovery in that example. But right now, we've seen some moments where we can bounce up over 50 here in this 3-year recession, but we are at a extended period of time where builder confidence is moving in the wrong direction. It's remaining, as NAHB put it, relatively low. I would argue that, we can't get much lower than where we're at right now. Okay. If I go to, I'm going to just jump into X here. Okay. Logan Motoshami, our friend of Knowledge Brokers Pod, of course, and friend of BAM, he posted this a few weeks ago. It's never a good sign when manufacturing and residential labor are falling together. And here you go. As those layoffs ensue, you do see another indicator here, as mentioned in the NAHB chart, that those layoffs ensue, which we're seeing a little bit of right now. The labor for residential and manufacturing, both together and in combination, are moving down. You typically see an impact to the economy. If we can get rates figured out quickly, it's one of the reasons why there's such an emphasis right now on rates. That could turn around. Okay, just jumping back into the slide I have for you guys on school for BAMX members. There have been moments of hope, and so you can see the confidence. You get rates starting with a 5 handle. I would suspect you'd get this pretty close back to the red line equilibrium, and back to maybe an overall index of 50, especially if there's belief that we're going to maintain sub 6 interest rates. Okay. That has been, I think, one of the big concerns here for builders is like, okay, we're seeing a lower rate now. How long is it going to last? Again, you got to go back to April of 24. So about a year and a half ago for the last time we were north of 50 on the index. All right, there's the NAHB report. Here are some more nuggets from that I think are important. Current sales conditions are down to a 35 level. Sales expectations in the next 6 months hold at a 43, and traffic of prospective buyers posted a 2-point gain, 22. We're seeing, mortgage applications increase, but 22 on a scale of 100 is really bad. Okay, so not seeing the traffic that they want to see. And builders are holding still today 10 months of inventory, which is just way too much. Okay. Sales incentives for August was 66%. The use of sales incentives, that's up from 62%. So builders are having to do a upsell feature to sell these. If you were in the role play this morning, you know what I'm talking about. An upsell feature to move more of their inventory. All right, we had a report this morning. It's something that Wall Street's watching. Everybody looking at the economy is looking at this number here. It's housing starts. Okay, what are housing starts going to come in at? Here's the new residential construction building permits comes in at 1.35 million. This is seasonally adjusted for the annual rate. The housing starts comes in at 1.428 million, and housing completions coming in at 145. You can see here on the line chart, completions and starts moving up, and permits, so future building moving down. Okay, just digging into those numbers a little bit here. That 1.354 on building permits is 2.8% below the revised June rate of 1.393. So permits moving down. It's 5.7% below year over year. That was 1.436. So month over month and year over year, permits, future of building moving down. Okay. Everybody, we need more inventory. We need more inventory. Builders saying, we're not going to give it to you in this rate environment. Okay. Not getting inventory from the builders with the current state of affairs. Housing starts, privately owned housing starts in July were adjusted to 1.528. It's 5.2% above June. And it's 1.358 million is 12.9% above July. So starts are up. Okay, that's interesting. Completions are 6% above June and 13.5% down year over year. So I think some of these numbers are actually a little bit surprising, particularly on month over month starts. I would have, and I think some of the projections had these numbers coming in lower than where we're actually seeing them. Okay, if we let me see if I have this. Housing starts will be released Tuesday, which that's the report we just looked at. It was released this morning. Data reveal number. So new residential projects have been expected to slip. So starts were expected to slip. This was the projection before the report. And that's from economists polled at Reuters. So quite the opposite here. Month over month, what's actually happened is there are more builders starting those projects. Now, permits, again, are down. So if you look further into the future, they're holding back, but the starts are actually up. So interesting there. Something else that everybody's watching here as we move into the Fed Jackson Hole week is what are Treasury yields going to do? Right now, kind of holding steady. The Fed's going to Jackson Hole. What a great deal that is. The FOMC, the committee that decides the Fed fund target rate. They've got their Jackson Hole symposium later in the week. I'd imagine what a spectacular time it is. End of August to be in Jackson Hole, deciding, well, should we or should we not cut this rate? We're going to get just an update on what's coming up here. Tomorrow, they're going to release the Fed minutes from this July meeting. Interesting. We'll be looking at that Thursday morning here on the hot sheet. If you're not subscribed to the channel and don't have the notifications set up, do that. We do this every Monday through Thursday at 9:30, this show. If you want the 24-hour look back on housing and how the economy is impacting housing for the housing professional, this is the place to get that information. And Thursday morning, we'll look at those meeting minutes because remember that this is the only meeting since 93 that you had two dissenting Fed governors. So we'll get some comments here this week, hopefully at the end of the week, whether we get to them this week or beginning of next week, from Jerome Powell on kind of what the temperature is right now on a rate cut as they're out in Jackson Hole, and we'll see if we can get any insights. Again, JP Morgan's calling for multiple cuts before the end of the year as a projection. And we're obviously not seeing any guarantees on that from the committee itself. The 10-year, again, holding steady at 4.31. And if we just go to like a 3-month outlook, it's on the lower side, but kind of where we've been here now for the greater part of the last week, 4.3 on the 10-year. So I would not expect much of a huge swing on the 30-year. 30-year is going to, as Logan Motashami says, the slow dance with the 10-year. Yesterday we came in at 6.59, a tick above where we were at the end of the week last week. CME Group has 83% chance that we will see a September cut from the Fed, but that's cut is only at 25 basis points. Okay. Join the #1 community in real estate for you to close more deals. That's BAMX on school.com/BAMX. You get access to all the new content every single week. New content drops right here, classroom number 2, as well as all of the slides, all of my show notes inside of the hot sheet, as well as on-demand courses. We have Sharon's Knowledge Bank uploaded in here. And we have information right here on the Zillow platform, which all of our members get access to. It's a $2,400 annual value. If Open Doors in your market, you must have this. You'd be silly not to. Zillow actually partners with agents, so your compensation is protected. Open Door publicly wants to kill agents. Their co-founder said that on X. They want to kill agent partnerships, not agents personally. Just making sure I'm clear on that. Killing agent partnerships. The pressure that Open Door is getting right now from the co-founders and those who are inflicting their pain on the board. You saw the CEO drop down. There was pain there. They're of the mindset to kill agent partnerships. Zillow gives every single BAMX member the platform just included in BAMX. Okay, so what you would typically pay, it's out the door when you're a BAMX member, and you get the ability to set a floor on every single seller you go to. Hey, I can get you 4 investor offers right now. You can compete directly with products like Open Door, which, by the way, love it or hate it, Open Door is going to get a ton of free PR. I mean, if you're not following that meme stock nonsense, okay, Open Door is going to get a whole ton of free PR. So you better be equipped with a solution. They're even ripping off. Zudilio's had this cash plus offer. I've used the cash plus offer personally. They ripped it off just this past week. We got a bunch of content on nowbam.com on kind of that story, but the meme crowd is pushing attention towards this. Be armed with a solution for your clients. Zillow is that solution. It's included for all BAMX members. School.com/BAMX for you to grab that. This week, today we have a Real Word pod will be up on the channel later. And then tomorrow for BAMX members, 3:00, we're doing content audits with Eric, the broke agent, and had a video here at BAM, Bobby Kowecki, also going to be taking part in the content audits for members. That'll be tomorrow, 3 p.m. Eastern, 12 on the West Coast. All right. Real Word later today. Make sure you subscribe so you don't miss it. Have a great day. Until then, toodaloo.